that President Trump is not going to back off, and that added to selling pressure. Even Peter Navarro did an interview on CBC reiterating that these are not negotiable, and it sent stocks reeling. So overall, the S&P fell 5% on the day after Tariff Liberation Day. A recession is very expensive. This is all the recessions since 1929. And in general, the fiscal response, which is what the government has to do, matches the decline of the GDP, which means the median fiscal spend is around 2.2% of GDP. So if the U.S. has a recession, Congress has to spend $660 billion to try to, and that's a minimum to try to get the U.S. out of a recession. Well, that would just negate all the benefits of the tariff.
Tom Lee starts by calling out the shockingly high tariff rates presented in recent headlines.
Tom Lee begins by highlighting the alarmingly high tariff rates in recent headlines. 34% on China, 20% on Europe, 24% on Japan, and 25% on Korea. These numbers seem shocking, especially since Japan and South Korea are U.S. allies. However, Lee clarifies that these aren't actual tariff rates, but rather ratios of trade deficits to export volumes, reflecting trade imbalances, not policy rates. Don't forget to like, subscribe, and turn on notifications for more videos like this. Check out our other content on cryptocurrencies and digital assets, and leave your thoughts in the comments below. Your engagement helps our channel grow. Thanks and enjoy.
First of all, the tariff rates that were shown are absurd. You've heard from many people talk about this. They are very hard to believe because the tariffs levied on China, for instance, is 34% on top of a penalty of 20%. Europe now has a 20% import for all products. Japan, 24%. Korea, 25%. Japan and Korea are allies. Additionally, I'm sure you've heard, but these exhibited tariff charged to USA rates are not actually tariff calculations, but it looks like it's some measure of the measure of the total deficit to the amount exported. Now, there are plenty of signs that Trump wants a deal. Now, I know I just showed you his lieutenant saying he doesn't want a deal. But keep in mind a couple of things. The implementation date for the higher rate is April 9th. That is a delay, and I think that's intentional. And in fact, Trump himself, and I'll share later, despite what Lutnick says, actually has commented that he believes that he can strike a deal. He gave an interview on Air Force One Thursday evening after the market closed, and he says, tariffs give us great power to negotiate. Specifically, he says, every country's calling us. That's the beauty of what we do. We put ourselves in the driver's seat. If we'd asked for the countries to do us a favor, they would have said no. Now they're doing anything for us. The tariffs give us great power to negotiate. Now, keep in mind, 6 countries, maybe 7, are really at the heart of this tariff negotiation because they represent the bulk of the dollars. If you look at the dollar amount of goods imported on the left side, okay, and there's a lot of countries listed here, the overall tariff rate, according to Goldman Sachs, is 12.6%, which is actually better than Goldman feared. At 15% was their base case. And the reason it's not in the 20s is because there's a lot of products exempted. But I do want to focus on those 6 or 7 that I just mentioned. Collectively, that's about $582 billion that are subject to tariffs, or that are, it's $2.2 trillion, and the overall tariffs raised from these are roughly $582 billion, or 70% of the tariffs. So at the end of the day, these are really the countries to focus on. Interestingly, on Thursday's trading day, these 7 countries outperformed the U.S. I think it's potentially a sign that they expect some sort of negotiation. And in fact, if you look at it since February, these countries, 7 of 7, outperformed the US, with particular outperformance today, especially for Mexico. At the sector level in the US, the left side shows you the 20 hardest hit industries. And I've just highlighted that many of these that were hit have overseas operations or they're importers of products. So it's not a surprise they're taking a hit. And the ones on the right are basically defensive groups, and tire and rubber, which not really too familiar with that industry. In terms of granny holdings, there are 4 stocks that I think do have specific exposure to tariffs because either they import products because of where they manufacture, such as Garmin or Eaton Corp, and of course Amazon. But Apple, of course, has overseas manufacturing. So these 4 out of the 33 names are particularly exposed. But again, as I said, it's really a macro issue because every stock became what I'd call no bid today. And so what do we expect these 6 countries to do? Well, they've got 3 options. They can retaliate, they can do nothing, or they can negotiate. Now, retaliation, I think, is not going to be helpful because there are countermeasures in place. So most likely these countries are going to negotiate. And I think I want to take this in bottom order, but Korea and Japan are allies of the US. I think it's going to be easy to come to some terms there. Canada and Mexico have the USMCA, so they're already negotiating with the US. Europe is a question mark because, of course, they're a very large trading partner. And I think China is likely to have some negotiation because there's give and take here. In fact, President Trump, in that same interview, talked about how TikTok is an example. They have a situation where China will probably approve a deal, but they want something exchange on the tariffs. So the tariffs give us great power to negotiate. So you can see there are reasons to expect some negotiations, and I think probabilities favor a negotiation. And if not, then of course there's a greater risk, which is a recession. And JP Morgan puts the odds at 60% of a recession if the tariffs are sustained. But here's the thing. A recession is very expensive. This is all the recessions since 1929. And in general, the fiscal response, which is what the government has to do, matches the decline of the GDP, which means the median fiscal spend is around 2.2% of GDP. So if the US has a recession, Congress has to spend $660 billion to try to, and that's a minimum to try to get the US out of a recession. Well, that would just negate all the benefits of the tariff.
April 2nd, dubbed Tariff Liberation Day, was intended as a show of strength, but instead led to a 5% drop in the S&P 500. Investors had hoped the administration would scale back some of the more aggressive tariff rates, but Commerce Secretary Ross and Peter Navarro appeared in the media to confirm there would be no backing down, which only heightened investor panic. Lee points out that this caught many by surprise, as market expectations didn't align with the policy's tone. As a result, the sell-off wasn't driven by fundamentals, but by surprise and risk aversion. Let's go back to the interview.
In terms of individual stock performance in the past week, the top 5 performers were Tesla, Abbott Labs, Costco, Progressive, and Garmin. And the bottom 5 performers are NVIDIA, PayPal, Eaton Corp, Oracle, and GE Vernova. And in terms of styles and themes, the best performing Granny Shots portfolio is the easing financial conditions, probably because investors are expecting the Fed to actually ease. The second is millennials, led by Tesla. And the third is stocks geared towards a PMI recovery. Now, to give you some background, in case you're wondering what a granny shot is, it refers to an unconventional way to do a free throw, which is underhanded, popularized by Rick Barry, NBA Hall of Famer, who made 90% of his shots. In the stock market, our idea of a granny shot is to find companies that are tied to the most important themes driving the market, such as millennials, global labor suppliers, AI, energy and cybersecurity, easing financial conditions, or some tactical things like style tilt, seasonality, or the PMI's recovery. But that's not enough. In order to be a granny shot, not only do you have to be one of the strongest stocks in these themes, you need to appear in multiple themes. So the more stocks you appear in, more themes you appear in, of course, the more likely you are geared towards the most important drivers of the next few years. And that's how we get granny shots. The price as of March 30th was $18.14, NAV of $18.15, and total assets of $866 million. It was a tough week for granny shots. Granny shots ETF is down 2.73% compared to a 1.5% decline for the market, or underperformance of 121 basis points. The reason for this is really macro. The markets have become risk-off, and it's because of Tariff Liberation Day, which was April 2nd, has triggered a lot of concerns for investors because it was worse than expected. It was a 10% base rate for imports with an additional tariff rate for other countries that have large trade deficits with the US. President Trump referred to this as the operation is over and the patient has lived, but the stock market reaction has been very negative. The S&P on Thursday opened with a 3% gap down, and throughout the day, stocks were reeling. One of the reasons stocks were reeling is that investors were hopeful that these tariff levels would actually be dialed back, but Commerce Secretary Lutnick made multiple media appearances and insisted that President Trump is not going to back off, and that added to selling pressure. Even Peter Navarro did an interview on CBC reiterating that these are not negotiable, and it sent stocks reeling. So overall, the S&P fell 5% on the day after Tariff Liberation Day. That's not what I would have expected, and I don't think a lot of people expected. It was a negative surprise. But I want to give you a rundown on our take.
Tom Lee believes there's still a strong possibility of a deal, despite the aggressive rhetoric. He points out that the structure of the policy rollout and Trump's own statements indicate that negotiation is the ultimate goal. However, if talks falter, the economic risk could be real and potentially recessionary. For investors, the message is clear. Stay focused on macro trends, monitor tariff developments closely, invest in sectors less exposed to global trade tensions, and keep an eye on long-term themes like financial easing, millennials, and PMI recovery. Don't forget to like and subscribe.